everybody. Welcome to Trading Conversations. You are here, my friend, because you believe that profitable trading is one of the most efficient ways to attain financial freedom and can be achieved as long as you are willing to put in the hard work to develop your trading competency. Our goal with this show is to introduce you to the traders who have dug through the trenches and emerged at the other end. From the sharing of their trading stories, strategies, workflow, and best practices, I hope to help you shorten your learning curve as you embark on your journey towards trading mastery. Today's guest is the CEO and co-founder of one of the fastest growing stock market platforms in the Philippines with over 360,000 users. He started his journey into the trading arena at a young age of 20 when he was still a student. After getting a taste of success in trading, he decided to accelerate his returns by borrowing money from investors to increase his trading capital. As such, was able to reach his first million at the age of 21. So please join me to welcome John Christian Bisnar, the CEO and co-founder of Investagrams. Hey JC, thanks for joining me in this episode of Trading Conversations. I still remember the first time that I met you over coffee when you were in Singapore for a business trip, and I was honestly pretty impressed that a young chap like you has already achieved so much, being a profitable trader while at the same time running a hugely successful startup in the Philippines. I believe that you are already a highly regarded personality in the Philippines, but as many of our audiences are based in Singapore and elsewhere, most people might not really know who you are and how you started your trading journey. So I think for a start in this interview, it would be great if you can start off by chatting a little bit about your past, right, JC? So can you share with us a little bit of how you started your journey and what was it like to start dabbling in the financial markets at a young age of 20 years old?
Yeah. So hi, Philip. Thank you for having me here. So during when I was 20 years old, I was in college back then. I didn't really know much about finance or trading, but then I came upon this internship opportunity with Macquarie Securities. So when I heard that it was about the stock market, actually the first time I heard about the stock market was in Will Smith's movie, The Pursuit of Happiness. So I remember the term, the stock market. It's the avenue where Will Smith was able to make himself rich and achieve financial freedom. So it struck me again that, hey, this Macquarie internship opportunity, maybe this is the key to getting inside the stock market. So I took the internship opportunity. I was an assistant of the dealers, the traders there, and monitoring the markets. At first, I didn't really know anything about the stock market. I just tried to cram the knowledge by reading 24 hours investing book. So it tells you that you can learn investing in 24 hours. But then after that, I got a hang of it. After that 3-month internship stint, I saw that there were lots of opportunities in the market. It was just like a game where if you were able to capture the upswings and avoid the downswings, then you could replicate these trades and make enormous wealth. So that's really my first encounter. After that internship, I took all my life savings. So it wasn't that big, around 500 to 1,000 USD. And then I started I opened an online account and then started trading. But after 2 months, I realized that, hey, if I wanted to make serious money in this endeavor, then I needed to increase my capital. So as a young student, you don't have any avenue to raise your capital, right? So what I did was I looked for potential investors and I convinced them that, hey, can I borrow your capital for 1 year? I'll pay you 1% a month or 12% per annum. And then that's how I initially built up my capital. So just to continue on your question, I was a total amateur beginner back then, but then since I made my first jackpot, so as a college student, making around 8,000 USD or 300,000 pesos, that's really a lot. That's almost 1 year or 2 years salary. So in my mind, yes, I was happy, but my attitude was, I have to be able to replicate this thing. I can't just rely on lucky all-ins or lucky circumstances of stocks that are operated well. I need to be able to rinse and repeat this thing so that I could make a living out of the markets. So that's the good thing about what I did. Instead of being complacent, I studied harder. So I bought more trading books. I spent more time practicing. Yeah. Speaking of consistency, I was able to really develop myself after you feel the pain, right? There's two things that can happen when you feel the losses. It's either you quit, you do revenge trading without any sort of improvement, or you use that pain to actually develop your new framework, your new system. So during this time frame when I went cash, I looked for books that could help me in my problem, like how do I handle 6-digit losses? Because if I wanted to trade a bigger amount, then I needed to control my psychology and my system. So I came upon this book called Trading in the Zone. So I'm not sure if you've read this by Michael Douglas. Douglas, yeah.
Yes. Yeah.
Yeah, I think it's one of the best trading psychology or systems thinking books out there. So I read that book and I didn't trade for around 2 to 3 weeks. So I really grasped his message there where before you even put a trade, you should already calculate the risks. You should already understand that the market will do anything. It can go up, it can go down. The most important thing is what are you going to do about it? How are you going to prepare when you actually put that trade? So I think that helped me a lot in my development. And to finally answer your question, I just continued trading for the next 2 to 3 years. Then on my third year, that was where I was able to say that, hey, I can do this consistently enough. Like the regular swings, whether it's a profit or a loss, didn't affect me anymore. I was just operating based on my system, my framework. So doing that consistently, I was able to multiply my portfolio by a certain degree. And that's where I said that, whoa, I've gotten the hang of it. I wasn't complacent. I didn't think that I was an expert, but I was already comfortable in finding new trades, making bigger positions, cutting my losses when needed. So that's where I was able to say I became consistent in my third year.
Did
Yep.
anything change
Yep.
for you thereafter? Since 4 years ago, did you like make any more significant changes to your trading workflow, trading strategy, or your trading psychology in any aspects of those? Or do you just constantly just apply the same basic methodology throughout since then?
Well, it's definitely a constant improvement. But what's good? So I just continued reading books about other market wizards like Jack Schwager's book. So I tried to study what other good traders are doing. And what's funny is that a lot of them would have the same main framework. So the framework that really stuck to me was you should hold your winners, ride the winners or the market favorites, cut your losses short. So if a stock is acting weak or it's dragging your portfolio, you should have a smaller allocation, and then risk management. So those three simple rules, allocating on strong stocks or trending stocks, cutting losers or avoiding downtrend stocks, and then balancing your portfolio so that no single trade can destroy you. I think those are the three main components that I just practiced throughout the years. And of course, the the main framework is the same, but what you actually develop over the years are the small details, perhaps minor adjustments on where you buy or sell. For example, there are many times before where I wanted to ride super stocks, like stocks that go 100%, 200%, but I observed that a lot of times I was selling early. So there were super bagger stocks that I had the perfect buy price. I bought them early, but I'd sell them at 20%, 40%. I thought it was good already, but I didn't realize that, hey, you don't know the upside. Strong stocks can really go on a strong trend. So that's where in my latter years, I was able to grasp that framework that the upside, you have to respect it. Sometimes you can't give a target price or a fixed notion that this is high already, because the real strong stocks will just continue to go up. So I think that's the discipline. So it's not just about the discipline of managing your losses, it's about the discipline of not taking profit instantly if you're in the right position.
I see, I see. All right, so Jesse, before we move on to for you to share a bit more about your current trading strategies, workflow in general, would you just like to share with the audiences what might be some of those worst mistakes that you could remember during the early part of your trading journey when you were still trying to build yourself to become proficient? What were some of the worst mistakes that you made that you think will be very helpful for our audiences to learn and know and prevent themselves from making the similar mistakes?
So the first mistake, I think, though I learned this early, I think first mistake that a lot of beginners incur is they enter the market without a system, a strategy. So that's the first mistake, because if you don't have a specific set of rules or parameters to determine where you're going to buy or sell, then every trade that you make can potentially be a mistake. So this is common to most beginner traders that enter the market based on rumors, tips, gut feel, their friends, their emotions, or just some random purchasing of stocks. So that's the first mistake. You need, as early as possible, you need to be able to determine a system or strategy that can be repeated so that you can make money over time. And then next mistake that I think is important as a beginner, if you're holding, of course, when we're starting, we're not really managing that big of a portfolio. So maybe most beginners would start with an account less than 1,000 USD or 50,000 pesos. And if you're holding a portfolio that's not so big, in your mind, you're getting complacent, because in your mind, oh, it's okay, I can go all in on this. It's just a small amount. And if I lose this amount, I can just work for it. My salary is going to cover this up. But I'd like to point out that even if you're starting with small amounts like 1,000 USD or 2,000 USD, it's good to be able to practice a balanced trading approach already, like risk management, making sure that you know your position sizing and the probabilities of the trades that you're making. Because what you develop at the early stage, you also bring at the latter stage. So I think that's one barrier that I see that hinders a lot of traders to progress. I see lots of traders, they are good on 100,000 to 500,000 accounts, but when they progress to 1 million, 3 million, 5 million, then they bring these bad habits of acting like superstar traders, going all in carelessly. That's where it becomes painful, when they encounter mistakes at that higher level. So I think that's an important thing to take note of.
Fantastic, fantastic. All right, so now before I move on to my question, some of the other questions to ask you about your current trading workflow and strategies. Jesse, I understand that you are actually currently organizing this wonderful event in Singapore on the 27th of July called the Investagrams Traders Summit, where you actually invited traders, fund managers, and market wizards from around the world together to exchange trading experiences. Would you like to share with us a little bit more about this event and who will be speaking in this event other than yourself?
Yeah, so we're launching Investagrams Traders Summit on July 27th in Singapore, Joyden Hall. So what we did here was, in order to level up the retail trader strategies, we want to learn from some of the best and most notable traders in the world. So what we gathered, when I was starting as a trader, I didn't have any formal mentors. So what we actually did was, the people that you could have only read about in books, we tried to bring them together live in one event so that they can share to you their trading knowledge firsthand. So we've invited certain market wizards such as Mr. Mark Ritchie. He's featured as one of the first market wizards in Jack Schwager's book. And what's cool is his son is also trading, Mark Ritchie II. He's featured in the Momentum Masters book. of Mark Minervini. So Mark Ritchie II. So it's a father and son combo. It's good. It's really fortunate that these speakers, they came from United States, far away from Asia. They're willing to go here and share their insights. And then another person that we invited was Andreas Klenau. So he's an author of two books, Trend Following and Stocks on the Move. So these titles may seem common, but Andreas' specialty, he's the CIO, Chief Investment Officer of the hedge fund called Assis Capital in Switzerland. And if you take a look at their background, based on their portfolio performance, they never had a major drawdown throughout their years. So if you could see their returns, it's just going up and up. And the first time I first noticed of Andreas was when I was researching on quantitative trading. So Andreas will share how traders use quantitative trading to get an edge in the markets. So I think these are the newer form of strategies, more modern strategies that we don't often get exposure to as regular traders. And lastly, of course, we're bringing in some of the great local traders in Singapore, such as Robin Ho. So Robin Ho, one of the most famous and known traders, he was able to capture the major crash. He was able to short the market during the financial crisis and make 2 million USD. And then Mr. Jake Chow from CGS CIMB, the co-chair and head of this chartered market technician group in Singapore. And lastly, Rainer Teo, our friend. So Rainer Teo has definitely saved lots of traders from destruction. And it's an interesting speaker lineup that we have, and we're hoping that we could see you there.
I see. So your trenches actually happen within the day itself, right? Only because you mentioned that you are generally a position trader, which means that I would suppose you usually hold your how long typically do you hold your profitable trades generally? I mean, assuming if they work out according to what you're looking at.
So that's something that I have to develop, I think. So I haven't looked that much on time stops, like putting a time limit on my position. So what I really do now is more of system-based selling or buying. So if the stock is still intact and it continues to go in a trend, then I will hold on to it as long as I can. So one example was I've been holding this certain stock at around 5 months to 6 months already. So sometimes, as long as the structure is intact and I still feel that it's gonna make a bigger move in the future, then I'm just gonna hold on to that stock. So it really depends. But for normal trades, for stocks that don't go on a big move, it can go as fast as 2 weeks on speculative stocks, or around 2 months for stocks that really go on a short-term trend.
I see. And what is your typical stop loss strategy, like your methodology for your stop loss?
So stop loss, it's either if I'm on a profitable position, then I just continue to trail my stops, use basic moving averages plus a combination of price action. So if the price breaks down, short-term moving averages doesn't sustain, then I trim my position. But it also depends on the DNA of a stock. So sometimes some stocks don't go trending. They just spike and then die. So stocks that are a bit more risky or a bit more speculative in flavor, these kind of names, speculative stocks, I try to swing trade as well. So I look for divergences. So if there are divergences or major divergences that form on extreme moves, then I try to trim my position so that I can protect profits or even buy back when the stock goes to initial supports. So it's mainly indicator based and then price action based. So these are how I formulate my stops.
I see. How do you go about like sizing the trade? Is there any methodology that you use? And at any point in time, do you have like more than a certain number of positions open at the same time, or do you actually control that or refrain from having too many open positions at the same time?
Well, when I'm able to identify the real winners in the market, like the real solid stocks, then I can go heavy. Like I typically go 3 to 4 stocks dividing my portfolio. So each stock would have 25% to 30 plus or 40% exposure. 40%, that's only a few times. So it's mainly 20 to 33% exposure. And that would be heavy already if you're trading a significant capital. So one thing that there are two ways that there are two aspects that I consider when position sizing. First is the liquidity of the stock. Example, if you buy 3 million pesos of a speculative stock, how sure am I that I can exit when I need to exit? So I always observe the average volume, the bid and ask of this stock, and can I sell down when I need to sell down? So that's one thing. And then next, of course, would be the VAR, value at risk, or just the making sure that even if this position loses, it's not going to hurt too much. So I'm making sure that on each position, the most damage that would happen to my port can go ranging from a 1% VAR, or if I'm confident or if I'm holding profits, it can go as high as 3% VAR. But but I only do the 3% and above VAR if I'm already on a profit. So that's how I can scale. So I use my initial profits to multiply my position, make it bigger.
I see, yeah. I see. So you actually do decide on the each position's value at risk, and you probably use that to size your trade so that to make sure that the value at risk is contained within that certain parameter, right?
Yeah.
I see, I see. All right, so cool. So, and how do you go about taking your profits? Do you generally set a profit target, or as you mentioned earlier on, you seems to be using some kind of a trailing stop? Do you actually use a combination, or do you exclusively just use trailing stop itself?
So my main framework is I adapt depending on the market environment and then the stock that I'm trading. So, excuse me. So if the stock is a bit speculative in nature or a battered stock, example, we're trading a downtrending stock that looks like it's gonna bounce. My tendency on that is I'm more inclined to sell on spike, sell on strength. So that's where I use my target prices or sell on the first spike or something like that. So that's where I become more conservative. But again, the other side of me is I'm a trend follower. So I mix both worlds. So one tranche, I sell when there's initial TPs being hit. But the other tranche, if I feel like the stock still has a catalyst or a potential reversal story or any form of health that can sustain the move, then I'm gonna leave a position so that I could trail my profits or either do another buyback if the stock continues on its move. So it's really a mix of setting target prices or following the trend. So depending on the environment, depending on the stock that I buy.
I understand that you being a trader, but somehow I think a few years back you decided to start Investagram. All right, so I was actually thinking that if you might have want to consider like starting a hedge fund instead, since you already had the experience of raising money when you were 20 years old. So why do you choose to start Investagram rather than possibly like raising a fund and start your own hedge fund from there? Have you ever thought about doing that?
Actually, I did that. I'm a licensed stockbroker, right, in the Philippines. So I manage discretionary funds for clients. So it's like a fund on its own, and then I do the decisions. I make a profit share from them depending on our agreements. So it's almost like a hedge fund. But during that time, that was around 2013 to 16, before Investagrams came. So what I realized was it's cool to make your own money through trading. But what we've seen in the Philippines was for the past 50 years, less than 1% of the population is investing into stocks or mutual funds. So for the past 50 years, Filipinos didn't benefit from any economic growth or bull runs, while the fund managers, the clients that we had in Credit Suisse, Macquarie, was making tons of money investing into a growth market like Philippines. The sad fact was the regular Filipinos didn't benefit. So that's where I had the inspiration that, hey, whatever I'm making in the markets today, whatever million that I've reached, I don't want to keep this to myself. I want to create a startup, a company where I can be able to share my passion and share it to other my countrymen and to other Filipinos. So that's the reason why I didn't pursue straight into fund management, because that's another path. If we only cared for money, then we're just gonna raise 100 million pesos or trade it in abroad. Then every 10% of that, you're gonna make 10M, 10M, 10M. Then if that's gonna make you happy, then cool, you're gonna be rich already. But the other side is I realized that I actually don't use my money just to share to you. Like the portfolio that I grew, the most expensive thing that I bought, I think, was a laptop, this laptop. So around 100,000 pesos. But I don't have a car. I don't know what to do with the money. So in my mind, I just want to utilize money so that you can create impact in the world. And that's why we chose to really focus on this startup. We don't just want to be traders. We want to create a positive change in society.